Hey traders, welcome to Charts and Coffee. Happy Friday, everybody. Valentine's Day. All right, hope everyone had some fun planned for later on. But before we get to the end of the week and the end of this Friday trading day, we need to take a look at a few things that are happening right now that we can take advantage of. Probably the first thing is a little bit of housekeeping. So as I'm going through today and the open trades that we have, one of the things that I'm going to be doing is looking at gold. Gold continues to be a trade that we've set up in the Sector Secrets Mastery. And for traders who took the trade and are long GLD, this is something that we'll be managing going into today. And, ideally, it continues to push up to higher highs, but it's done its job. And at this point, we'll look for another. And what I'll be doing with gold is just looking for more strength in the commodity. And that commodity has been, lifting up the sector that relies on it. And that's the high tide of gold miners. So let's definitely keep an eye on that as we go forward. By the way, if you have any questions, let me know what you're looking at, what time frame you're looking at. Are you bullish? Are you bearish? Is it an open trade right now that you're managing, etc.? Detail is great. So let's go ahead and take a peek at what else is going on. Now, I mentioned if gold continues to rally, I've got my eye on GDX. GDX will be another symbol that if it pulls back, I am going to look for a pullback. Right now, it's going to be in that 41 area. Every single morning, I've got a new set of zones that I can look at: the gold zone, the gray zone, and ultimately my plan, and the plan that I would always, this is the time tested stuff, right? This is the stuff that I rely on. The time that I'm going to be timing I'm going to be using is wait for that day. And remember, buys don't always come to us with bullish news and good news, right? Those on the sale, buy the dips are always going to be coming with weakness and usually negativity. You just have to get over that because nothing has good news every day. And sometimes we need that little bit of a letdown, profit taking, a little bit of pessimism within the context of an uptrend. That's what I'm going to rely on. That's what I'm going to jump into. So those are things that are very much a part of my process. Find something that's already moving higher and take advantage of it on a day where we can see, right? I can look at the news, I can look at price, and I see that it's pulling back. That's a dip, right? What makes it so hard, right? What makes it so hard is that it's not going to come with good news. Most of the time, the broader conversation is going to be something rather negative. All right. So yes, happy Valentine's Day. All right. First up is RKLB. All right. RKLB. Now, we always want to think upstream of any symbol. And if you've been watching Charts and Coffee for any amount of time, we always want to compare something to things that it tends to move with. RKLB does not have a trend. What I will do if I'm looking to set up RKLB, let me grab my drawing tools here. Okay, there we go. So if I'm looking to set up RKLB, it's gonna work out like this. First, I recognize where the support and resistance are. These are automated, so it's really easy to recognize what these are. So it's automated. There's my support, there's my resistance. All right, now I call this to cut the sandwich in half. So cut it in half, cut that sandwich in half again. And in the bottom quarter is where I will look to pick up long calls. This is really for me a more of an oversold, right? Oversold, overbought conversation. So this is not where I want to be a buyer, right? This is where I want to be a buyer. And that's why I'll look in that lower quarter of the zone. And you can see that's pretty much where we are. The other thing that I would say before saying, hey, RKLB is something that I do want to trade, I think it's so important. And this is what I show traders in the Sector Secrets Mastery. Why is this on a list of symbols, and what group is it moving with? And RKLB is something that you'll find on the IBD Innovator 50 list. And if I look at that entire list and we take the step higher that I always start with, which is why does that particular symbol have my attention? And it's going to earn it based on the characteristics of its trend. And that's where I say for me, there's a lot of other things that probably look a little bit better, or in some cases a lot better, because they don't have bearish momentum and they do have a bullish trend. So a lot of times the mistakes in trading that I've made in the past are not mistakes that I've made because I didn't buy a call with the right timing, or I didn't put the strategy on with the right process. It's because I chose the wrong thing to do all those things to ultimately come out with a trade. So this is why I say what I trade is more important than how I trade it. All right. So yeah, RKLB is fine, but I think there are better things we could look at. And that's where my process comes into focusing on the trend. Thank you for the question. That is a symbol that has a lot of attention. Attention is always good. Attention means flow. Flow means follow through. And it's just a matter now of timing for that entry. All right. And, in terms of a target, I would not ever pick a target that requires a new high. So thank you for the follow-up on that. My initial target is really simple. Where have we stopped before? Right? Not something that requires a new high. That could be a second target for me, but I will never have a T1 that requires a new high. I will, if I've got really good timing on an entry, we just traverse right here, but the price traverses the zone. The first place I'll look to scale out is around 33. And then if we punch up to a new high, then, that's where 35 or something else could come into play. If you say, Rob, I want to go with 35. Okay, here's another thing that I would do. Again, same timing on the entry. And then here, I would start to manage risk with an adjustment to a break even. So that way, if I have a more ambitious upside target, I've done my first job, which is acknowledge that trading is risky. I want to manage my capital. Like I really care about my money, right? Nobody cares more about my money than I do. No one cares more about your money than you do. So how do we protect it? And that would be another way if there's a more ambitious upside target, right? So it's just a matter of process. That's what I teach, gang. I teach process. It's repeating. The indicators are automated. And the value of that is kind of going back to what I said before. I'm here like a fishing guide. Hey, that's where I found the fish to be. This is the time of day that I think they bite. This is the kind of lure that I've seen they bite on before. And then my job is to put traders there so you can cast your own line. Because at the end of the day, that's the only way we find success. Trading is not a blind trade along. Trading is not someone coming to rescue us. Trading is there a process that's time tested that I can understand and execute, right? And that's where I think a lot of traders, run into trouble. So thank you all for being here and asking questions so you can hone your own process in. All right, live cattle. Matt, I have not looked at cattle, frankly, at all. I almost hesitate to bring it up because I cannot even tell you the last time I traded it. But, the thing that we can do to look at kind of what we were just talking about with Donald, comparing things. What if I look at a dashboard, right? If I want to pull up different market dashboards and compare where that commodity is and does it have relative performance. I'd say, if you're looking at I tend to look at grains and meats with a similar focus. And you can see there, if I'm looking at anything that's strong, the only thing stronger than cattle kind of on my list here would be corn. Okay. So where is cattle on the list? It's up about 7%. Feeder cattle, corn, copper, natty. Those are all. And then, by the way, the gold and silver, the metals are up there as well. So that's the first thing I would consider in terms of relative performance. So you do have a good relative performance symbol there. But I'll tell you what I would probably say with cattle, and this is going to take me down a very different, Matt, and thank you for asking. So I think for me, the most upfront thing I can tell you is I haven't traded cattle and feeder cattle in a long time. And here's why. They have their own hot zones. They have their own seasonals. They have their own trends. And if I am going to lump it in and understand where it's going, what I'll usually end up doing is watching things like cattle and corn and grains and meats, and then look to see what stocks and sectors benefit from rallies in those sectors. I'll have to put some thought into that, Matt. Yeah, if you wouldn't mind, ask me again on Monday or Tuesday in the next Charts and Coffee. And I just don't want to throw something out there and see if it sticks. Let me take a good look at it, because I haven't followed the narrative at all. But one thing I could probably do with you here is jump on over to look at really quickly the seasonals. I believe I do have some seasonal data. All right, let's take a look. And if I look at seasonals, which do not override the trend, oh, that's very interesting. I did not realize Q1 could set up for some interesting movement in cattle. Wow. Okay, that's a 5-year and 10-year look back. How about a 45-year look back? Yowza. What goes on in Q1 that tends to set this up? What is live cattle, LE or LC? Okay, LE. There you go. Wow. Okay. So, Matt, we've lost the trend. We've gone neutral. We have our first red candle, and seasonally things could get wobbly. So that's all I can tell you right now based on the data that I have. All right. Pins. Sure. Oh, where's my clock? There we go. All right. So pins. Good reaction to earnings. Gap up. Pulling back. Still in an uptrend. It's just a matter of finding a level or a pattern, price pattern, that would suggest A, there's a support level, B, there's a bid. Bidding is buying. Bidding is demand, however you want to look at it. Bidding is a floor. And so, here's a challenge of here, let me show you this with pins. IBM did something similar. IBM did something similar, gapped way up, and then kind of was messy for a little bit before it regained the strength of the gap up. So I would say pins, give it a little bit. That gap up on earnings is kind of like the pot boiling over. Got a little bit of a mess to clean up. I would say the pot just boiled over thanks to earnings. Now we've got a little bit of a mess in the stove. Give it a moment and then go from there. All right. And that's what I would do. Shiva, that's what I would do with pins. All right. Hey there, Jeff. Good morning. Just joined the mastery. Oh, excellent. Excellent. A new member in the Sector Fu Mojo Dojo Trading House. Awesome. ALAB. Sure. And when you're in the room with us, Jeff, I'll get into a lot more detail as far as reading what these candles mean, and then making a decision about what it is, if anything, that we want to do with something like ALAB. ALAB, Jeff, would be more of a weekly thing. All right. In terms of the direction, if you're bullish, right? So one of the first things you're going to learn in the mastery, Jeff, is every time I look at a chart, I have to be very clearly bullish or bearish, never in the middle. In the middle is where we get chopped up. In the middle is where we get run over. I want to be either bullish when I look at a time frame and symbol, or bearish when I look at a time frame or symbol, because that's, for me, where the continuity is. That's where that follow through is going to be. The follow through to the upside is probably right now a little bit more interesting on the weekly of ALAB. It's a mean reversion on that time frame. It's a lot heavier on the daily. Be really careful. However, there is some value in the equator. That's another tool that I use to make decisions about whether or not I'm on the bullish or bearish side of things. And being above 82.5, 82.80 would probably be, staying above that, finding a bid at that level would be pretty positive for ALAB. But I'm not allowed to buy red candles. I'm not allowed to buy calls. That's what my indicators tell me. So looking forward to seeing you on the inside there, my friend. By the way, I do want to remind everybody, if for those of you that are in the class, and I know there's oftentimes some time zone acrobatics that need to be done, but the immersion time tech session is today. So if you've been on the fence about, Rog, this is something I want to do. Do I want to hang out with you for the next 3 months, get weekly lessons from you for the next 3 months, get what it is you're looking at, alerts for the next 3 months. Maybe you're looking for some of the tools that I use that are on my charts, whatever it is, check it out at my.simplertrading.com. And the tech session starts, gang, at noon Eastern. I don't know what the obsession about Central Time is. I'll never understand. We live in an East Coast world when we're trading. So let's talk in the time that it is of. It is tech session begins at noon Eastern, right? East Coast time. So that is where we will be discussing the tools that I have been using for the better part of 2 and 3 decades, almost 3.5 decades now. And then after that, at 1 p.m. Eastern, I believe it's 1, we'll start the daily and hourly price movement range tech session. But tech sessions start at noon, gang. Okay. All right. So there's that. Let's see what else we have here. So that's ALAB. And Penelope says, I've got the Darvis 2.0 on my charts. What do the yellow lines mean versus the purple? It's just so we can pair them up. It's just so we can pair them up. So let's use ALAB for a moment. So Penelope, if this were, the reason we call it the Darvis is a process that's known as a Darvis box. The reason I don't call these Darvis boxes is because they really aren't Darvis boxes, but they're very influenced and inspired by it. I love giving homage to the people, the processes that made me the trader that I am. And this is a process that was really developed in the 50s. And based on that, this is what I look at. So it's not really a Darvis box, but it is a Darvis. And once upon a time, if you're looking at Darvis boxes, as I did in my teens, in my early 20s, that's what it would look like. All right. So when I say pair it up, this is what I mean. That's the box right there. And then if you look at the other box here, right, just connect that. That's the other box. Right. And so what I mean, pair them up. Now you know this line belongs to that line. This line belongs to, right, this line. And that's kind of the old school Darvis box. All right. I don't like the sides because they cover up the wicks of the candle, right? We need those wicks. We need to know where they are. So I just take the sides off it, but that's how you know what line belongs to which. Okay. All right. So thank you for the question. And then whichever, then it's just a matter of support and resistance. So that's resistance, that's support, right? That's resistance, that's support. Okay. Jeff asks, are Darvis boxes similar to, what's VCP? Jeff, sometimes I'm not up on all the acronyms. Is it similar to a flag pattern? Jeff, so here, great question. Okay, great question. That's a great place to wrap up on. So flag patterns are usually something like a pole, and then you could have this would be a bear flag, pole, and then maybe you have a bull flag, right? They point in the opposite direction of the expected move. All right, these are actually what are known as chart patterns. We're looking for shapes and things like that. I don't use chart patterns. I haven't used chart patterns in a really, really long time because they're super subjective. I'm not saying they're effective. Just this is what I do. I don't use chart patterns, right? That's not something that I actually use. What I do use are price patterns. Price patterns are different things that we can see happening with open, high, low, close. So if I said there's a minor low price pattern, that is a lower low surrounded by 2 higher lows, that is as objective a pattern as I can find, right? If I tell you an inside candle is a larger candle where the preceding candle trades within that range, it might look like a chart pattern, but it's actually a price pattern. So I use price patterns, and the Darvis uses price patterns to recognize that if a certain pattern forms, now I have resistance. If a certain pattern forms, now I have support. And if they happen within an allowable amount of time relative to each other, boom, I've got that channel. Thank you for the question, Jeff. Great question. Great question. So that's a consolidation pattern. So yeah, so if a consolidation pattern is going to happen, then it would be a narrower version of this, right? It would be a narrower version of this. And this actually goes back to, look, I'm going to give credit where credit is due. This is Charles Dow 101. If I'm going to look for an accumulation, right, narrow sideways range, I want to see that there is actually low volume. I want to see it's actually pretty low on volatility as well. There's a couple of things that I will define as a narrow channel. And then I'm going to start to determine which way the likely breakout is going to be, things like that. But terrific question. Thank you very much. Thank you very much. Okay, and that's the way I'll measure it. So everything's going to have a very objective criteria, and I'm going to automate as much of it as I can. And narrow accumulation patterns, consolidation patterns, always have to be in comparison. This would be a consolidation pattern only because look at the width of this thing is far bigger. This would be a little bit more what I would consider in Charles Dow language. I would consider this distribution. And so much of what I do, gang, is based on Dow theory, over century-old Dow theory. And this is basic Dow theory discussion where I've done my best to identify these things in an automated way. So that's why I would look at, if you're looking at the difference between a consolidation, right, narrow range versus chop. There's a really good example, but it's always relative to what's on the screen. Thanks for the question. All right, gang, I gotta go. Thanks as always for being here. The session for the tech and the immersion begins at noon. So if you haven't checked it out yet, my.simplertrading.com/immersion, and I will see you all on the inside. Be good to each other.